Hello, she's Camila Prieto and my name is Juliet Munoz. This is the video number 6 of the Forex transaction.
So for this week we have news about the Japan Bank, the long-term rates in Japan, the uncertainty in the European Union and the UK Brexit, also news about Canadian economy and the Treasury US bonds, the behavior of the economy in the Eurozone.
For the day 1, we did dollar yen transaction. For the day number 2, we did pound euro transaction. For the day number 3, we did dollar and Canadian dollar transaction. And finally, for the week, we did euro and dollar transaction.
So we're gonna show you our analysis.
The first transaction was between dollar and yen on September 19. This was based in dollar funds with Treasury made Fed, Bank of Japan cooled down, oil rises, obtaining to Bloomberg. This notice was about the dollar's value dropped by 0.4 against the yen due to the fact that the global manifestation of bonds disaffected Treasury values. We released a loan and the operation has remained open the whole week. So it suffered how the change presented both economies to stand out. First, the decision on the rates and bonds generate volatility in both economies. Japan was higher on September 20, which did that the use the long was inadequate. Second, on September 21, Olsen chief economy and Dashen Bank spoke about that they removed the long-term rates about what generate inflation and the other sources, what speaking it brings over the fall of the deflation in Japan that will reactivate the economy. The conclusion of the week with regard to the transaction is based on the news that they affirm that during the 9 factors established themselves in Japan, because it was the unique moment where we could have won with a long.
So the second transaction on the week was pound euro, and the notice we used to make this transaction was Brexit battered pound emerged as fever short before fit. So this notice talked about the pound fell to a 1-month low as European Union leaders hinted their rhetoric over the consequences for Britain of leaving the trading bloc. Sterling was the worst performer among its group of 10 peers after State Secretary for European Union Affairs Thomas Broussa said late Monday that the UK has zero change of declining an exit deal with both immigration curbs and free market access. The pound dropped 0.5% after touching the lowest level since August 16. Sterling fell for the past 2 weeks versus the dollar after a 3-week winning run. Britain's currency slipped 0.5% to 85.16 pence per euro, also reaching the weakest in about a month. So, according to this article, the pound's behavior for this week indicates that the most convenient transaction to make is a short, in which one we are going to sell in a high currency price and they pay it in a lower price, taking advantage of the decrease of the pound. And that's what we did for this week.
The transaction was between dollar and Canadian dollar on September 21. This was based in Treasury United States bond. Yield rise had all Fed rate decision obtained to Reuters. This notice was about Treasury United States bond yield rate had than the expectation of the investor, in which the Fed supports the rate of short-term interest. Other notice was slow was core inflation into the relative polls pessimism obtained to Bloomberg. This was about the Canadian economy. We released a loan, and the operation has remained open to work because we think that the dollar will up, but not. Because the same day, Stephen Pollans of the Canadian Bank spoke about maintaining low interest rate because this stimulates the consumption with of the credit. On having finished the week in the United Nations, the secretaries of China and Canada spoke it ranks over the agreement of the free trade. What I led us to obtain earnings in the down of the day of today.
The last transaction of this week was a euro dollar, and the notice we used to make this transaction was Eurozone bond yields edge up as bloc economy grows gradually. This notice talked about that the Eurozone bond yield edged up on Friday as investors turned their focus to the gradually expanding Eurozone economy following a central bank inspired rally the previous day. Eurozone business activity as a whole has expanded at its weakest rate since the start of 2015 through this month, but firms stopped cutting prices for the first time in a year. So the two bloc economies, France and Germany, had recorded a number above the 50 mark that separates growth from contraction. The overall picture is one of a slowly improving economy, weakening the case for further stimulus from the European Central Bank if inflation picks up towards the end of the year and because of the expansionary economic activity in the Eurozone. So the rise in yields follows a broad-based rally after the U.S. Federal Reserve on Wednesday opted not to raise rates and signaled an increasingly cautious approach to future rate hikes. That decision gave comfort to the market that central banks are still in expansionary mode, said Albert. The Vice President Vitor Constancio added to the debate, saying on Friday morning that the central bank had hoped that the Eurozone economy would respond to its stimulus measures more quickly. He also added that he is aware that low rates over a long period could raise financial stability risks. So, using this information, we could know that the European economy is in an expansionary process in which the economy has experienced a slowly improvement. So that's why we decided to make a loan with the uncertainty in a rise of the euro against the dollar according to the previous information.